Well, hello once again. This is Steve Taylor. I am the lead advisor and founder of Merited Wealth. And thanks again for tuning in to my podcast. Here we call it the Do It For Yourself podcast. So today I want to have a little different conversation, a little different format to what we've been doing over the last few episodes. And this is really building upon the idea we've had before, where we title these episodes, we call them thoughts in growth mode. Okay, these are ideas, advice, thinking to try to help you out with as you're building your business. Some good information that we feel will benefit you, right? These are the kind of questions that we think you're going through. I really know that you're going through them because I've been there myself, but I've also been having lots of conversations with different people out there that these are like the most common questions I get when they start and go out and begin their business about what they should and should not do. And there's a lot of misinformation that's going on, out there on various topics, but on this one in particular. So I want to start, and the question is really this simple. It's that when I'm starting my business, and really I'm focusing this conversation on those that are starting professional services businesses or just services business, you're selling your time for a fee, right? Whether you're an accountant, whether you're a lawyer, a doctor, whatever it might be, that you're starting up this business to say, when should I incorporate my business, right? What should I do as I am starting it up? What are the most important things for me to do? So this really, it somewhat depends on the profession you're in, but more so than not, from the financial side, really, you don't need to set up your own corporation immediately when you're starting your business, right? You don't. Just go out there, start doing it. Work on your branding, right? Put out there, find clients, figure out how you're going to deliver your services, whether you're a therapist, whether you're going to do it online or in person, how much you're going to charge per hour and all the like. Really, those are the most important things you should be thinking about. Because when you're starting out, the creation of a company will then require a tax return to be filed. And this could be anywhere of a couple $1,000s of expenses that, quite honestly, you really don't need as you're growing and as you're building your business. Okay, so number one, let's say what is the benefit of having a corporation, of setting up a corporation for your business. Okay, and one of the things I want to really dispel right away is one of the myths of that when you're starting this up, that a lot of people say, well, I'm going to set up my company so that I am protected, right? So that there's protection out there, which is really the term that's used without really specificity. No one really knows what it means or anything. Well, I'm protected by having a company. Well, let me tell you this. If you're providing a service, okay, and you are, whether it's a legal service, whether it's an accounting service, a therapist service or anything, any liability that typically arises from that service that you're giving, whether the advice or anything, like that, that will attach to you personally. And the business is really going to have nothing to do with that. In fact, Florida law has a provision that says that if you're a professional services business, that you have to put that on there when you're creating the business, because there is not limited liability for the owner. Now, if you were making widgets, you were selling something like that, absolutely, there's benefit of having that corporate structure for your product. But when you're an individual, the company really isn't going to give you that protection. What is going to give you protection? Insurance. Typically, if you're, errors and omissions insurance, malpractice insurance, whatever might be out there. If there, is that risk that you want to cover, spend that money on a good insurance policy to get you that good coverage, rather than going through these unnecessary steps. Now, if you cannot find an insurance policy for the service that you want to provide, you should step back and say, oh, that tells me there's probably not that big of a liability that I have to, that I'm incurring here, right? So that there's not a risk that needs to be transferred over to somebody else. So that's a big reason and a myth why people create these companies, and really why you don't need it. Number two, if you have an employee, if you start taking on employees, maybe one employee, at this point, you still do not need to set up a company, the LLC. Doesn't matter. But what you do need to start doing and setting up and focusing on is the taxes and payroll. Okay. And you can do that not being an incorporated entity. Very simple. It's very common, because what you are when you go out there and you start working, okay, and you don't have this LLC or entity set up, you are what's called a sole proprietor, and you're recognized as a for business entity. So you can go out, you can set up bank accounts, you can set up payroll, you can get insurances. You have a legitimate business. It does not have to be an entity. And really, what's the most important, factor that goes into whether you set that up company or not is taxes, right? The different taxes and tax savings that may come to you by setting up this entity. Now, without going too much detail about this, I don't want to really overcomplicate it. I want to keep this simple. Until you are really making over about $45,000, $50,000 a year of income from your business, okay, the tax effect of you creating a company is really not going to be that great. And you probably should wait till you get to that point, to that level. Because what happens when you set up your company is now you're going to get paid in two different ways. You're going to get paid as wages for an employee of the company, and you're also going to take distributions as an owner of a company, okay? And the big difference there is that the distributions do not carry out with them payroll taxes. This is Social Security, this is Medicare. And let me tell you that as you're building your business, and I know many people, don't like to play cost and want to pay as little taxes as possible. But when you're starting your business, it's a very good idea to get into a good habit of paying your Social Security and Medicare taxes. Why? What's the benefit, right? So many people will come in and say, but Steve, I'm younger, I'm building my business. I'm not too concerned about this. I'm not worried about Social Security. I'm not worried about my retirement at this point. So let's set that concept aside for now, right? You want to be, aware of that and understand what's going out there. But the vast majority of people, what they don't understand is in the Social Security realm, okay, there are two facets to the benefit that you get. There is the retirement aspect, but there's also the disability aspect. That if you are paying your Social Security taxes and you get injured to where you can't work, there is a benefit and an ongoing benefit that will pay Social Security. Social Security will pay you a disability benefit to provide for you and your family. This is a huge benefit, okay? Many people, it's a good recommendation to go out and get disability insurance, right, when you get to a certain level. But as you're starting out, you probably in your watching costs, you're not really going to have that income to justify to be able to get that kind of insurance. So the Social Security system gives that to you, right? Now, another huge benefit of this Social Security disability is that if unfortunately, you have to avail yourself of this benefits, that disability benefit. If you're on Social Security disability for 24 months, you now get Medicare. So now you're solving one of the other biggest issues for self-employed, and as you're starting up, is to where do you get your health insurance, right? So I really want to make that recommendation. And as you're sitting down, as you're deciding what to do, and as you're filing your taxes at the end of the year, you do want to pay some of the Social Security taxes in there, because there absolutely is benefit. And many people unwittingly, whether through bad advice or certain practices, maybe they'll start a company and they'll take distributions for 20 or 30 years, and then they have no history and they have no Social Security. All right, that's going to cost their Medicaid to be more expensive. They're not going to be currently insurable for disability benefits. All right, so there is a benefit to doing that. Now, the next question comes in. Okay, so I don't have a company. I'm starting my business, but how do I file? How do I file my taxes? What happens there? So if you do not have a company set up, it's very simple how you file your taxes. It is a schedule on your personal tax return, which is called Schedule C, and you have all of your income and business expenses right on that one form, and you report your taxes, okay, to the IRS. It's a very simple way of which sole proprietors do this. Another big item that comes up, right? And understand this. If you have an expense that was incurred for your business that you're trying to make income, you can deduct that expense no matter if you have incorporated your business or not. Okay, I want to repeat that because that's so important, because so many people, are wrong here, get confused here. They think they have to have this entity. No, you just have to have good accounting, keep your expenses in there, and you can take that deduction on your taxes the same as you would if you were in a company. Okay. Now, going through all of this and these conversations, I hope, you found this helpful in that when you're starting out, just to recap, you do not need to go and open up an LLC immediately, or an Inc. Okay. With the state of Florida, you have different options there. That's going to incur different expenses and trigger tax return filings and really add a lot of complication you don't necessarily need right away. You can go through, figure out your business. And once you get to a certain level, once again, anywhere about $45,000 to $50,000 a year of revenue, now you can start going in there and start getting your company together and start looking at the other aspects as you grow your business to in there. So, for those of you out there who, if you listen to this and you find this helpful, please let me know. I'd love to hear from you. If you have any other subjects you think you'd like me to talk about, or out there that you might have questions, maybe put them in the comment section below, or email us at podcast@meritedwealth.com, and we'll try to answer those out there and put those out there. So until that time, have a great day. Thanks for listening in, and we hope to catch you at another episode of the Do It For Yourself podcast.